Alright, I'm looking to go short here on NASDAQ, MNQ rather, in that tiny little bullish fair value gap that you see on the 1 minute chart, which is overlaying and sitting just near the low of the daily buy side imbalance, sell side inefficiency. Initially, I came into the day with a bullish bias. I wanted to see strength overnight. However, price was extremely weak and was able to displace through the daily buy side imbalance, sell side inefficiency that I was looking at. And here you see that 5 minute VISI as well. Price has just worked its way into the lower quadrant of the regular trading hours opening range gap. And whenever there is a large opening range gap that forms overnight, price is likely to just go into the lower quadrant and then have a continuation in the same direction as the gap. So in this case, we had a large gap lower. I had to abandon my bullish bias, and after price reached into the lower quadrant of the regular trading hours opening range gap, I'm expecting a continuation. And you can see I'm looking at the 5 minute buy side imbalance, sell side inefficiency there, along with the lower quadrant of the daily inefficiency. And also price failing to reach that 1 hour SIBI that you see annotated just above that swing high. The failure to reach that point shows weakness. And as price displaces below that swing low there, I was looking for speed. Price revisits that inefficiency. Wanted to see if that could be a potential breakaway. Took a little bit of heat on this execution. After my entry, you can see price retraced slightly higher towards that up close candle and that 5 minute inefficiency. And my draw is the 930 opening price. That's what I want to see if price can gravitate towards. Revisiting those consecutive up close candles and that 5 minute buy side imbalance, sell side inefficiency once again. If it stays in the lower half here, the narrative is still intact. And as you can see, it made a high, low, higher, high formation now. So that last down close candle makes the 1 minute breaker, bearish breaker. I'll be annotating that here as well. But you can see the body closing beneath that 5 minute inefficiency. Now we want to see quick displacement lower once again and see if it can get back below that swing low that it's formed. It's created that 1 minute buy side imbalance, sell side inefficiency, which is overlaying the low, the daily inefficiency, creating a balanced price range now with that one pass lower as well. And here's the breaker being annotated there. If it can get below that on a closing basis and use that as support for going lower, that's what I would want to see. I'm also taking a look at this wick, and I want the bodies to stay in the lower half of that. Trailing my stop just a bit here, removing some risk just above the swing high formed inside of that 5 minute inefficiency. I want to start seeing some displacement lower here. Using that breaker, I like how the bodies are staying in the lower half, also beneath that wick. And see if we can get below that swing low that it's just formed. It's working up towards that balanced price range. It has no reason to go up there, so I'm not too worried about that. Closing beneath the high of the breaker. Revisiting that one inefficiency one more time. That's SIBI. And you can see the reaction there. The bodies are staying inside of the breaker. Finally seeing some good displacement here. And I'm just removing the breaker just to keep the chart clean, but keep that in mind where it's at. Now I want to start seeing speed below that swing low. Let's see if it can give us that here. The next thing I'm looking at is that annotated wick. Wicks are essentially inefficiencies, and I would like to see it displace through the consequent encroachment of it, the midpoint. get into the lower half and just cut right through it. There, I'm reducing my risk just a little bit more as it's wicking into the consequent encroachment of that wick. Getting into the lower half there, closing in the lower half. That's what we want to see. And I move my stop to break even because at this point I do not want it to revisit that area and price anymore because it's all balanced. It has no reason to get up there. You can see it getting below that swing low. Now I'm annotating the first presentation fair value gap on the 1 minute chart. Since I'm only holding one contract, I'm currently holding for the 9:30 opening price. If I had more than one, I would have taken a partial below that low, the swing low of the wick that I've annotated. Now I've annotated the first presentation because I would like to see how price reacts to the high of that inefficiency if it is able to reach that level. Ideally, I don't want to see any resistance at that level. If it's bearish, if it's truly weak, it should have no problem cutting right through it. We can see the bodies are getting into the upper half of that wick once again. Here we can see it retrace back. Keep in mind that breaker that we previously had annotated. We're revisiting that level again. We also have the up close candle there, acting as the bearish order block in alignment with the breaker. There's also a tiny little inefficiency. Apologies for not having these levels annotated. I am just eyeballing them. They're roughly in the same range in price. So here I'm looking at the breaker and seeing where the bodies are closing in relation to it. And if it's bearish, it should not get into the upper half of that breaker. And as you can see, that's the case here. Price folding lower once again from that breaker, getting back below that swing low that's just formed. Now I want to see it displace through that swing low and pierce right through the first presentation fair value gap. That's what I would like to see. Let's see how price behaves as it reaches the high of the first presentation. Seeing it attempt to work lower, wicking into consequent encroachment of that wick once again. There's also that SIBI that's overlaying that wick, the midpoint of the wick. And now it's getting into that high of the first presentation fair value gap. Just wicking into it, failing to displace through it. That's not what I want to see. Let's see how this candle behaves. You also have the down close candle acting as the bearish order block. And you can see how price wicked into its opening price. Seeing the failure to reach that first presentation fair value gap, I'm going to take the low hanging fruit objective exit just above the high of the first presentation. If I had more than one contract, like I said, I would have taken a partial beneath that wick that I had annotated and held the remaining position for my terminus target at 9:30 opening price. And in this situation, price was able to reach that level. However, just holding one contract, I wanted to opt for the low hanging fruit objective there. It's not worth risking a potential reversal after a large range move overnight and seeing how lethargic it's been waltzing lower. That was my execution that I wanted to share. I hope this was helpful. Please leave a like and comment. Thank you guys for watching, and I'll see you next time.